Aloha YouTube, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at 5 great dividend companies that have been rewarding dividend investors for at least 100 years. So if you are looking for great companies that are stable, that have great dividend history, then look no further than these 5 great companies. As always, please remember that all of this is not financial advice. This is just me sharing. And also, if you haven't done so, hit that like button, hit that subscribe button, and don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. Without any more delays, let's take a look at these companies. So the first company that I'm talking about is General Mills. The ticker symbol is GIS. Pretty much a staple in any household places. This is mostly known. This company is mostly known for cereals. So if you go to their website and you want to learn a little bit more about this company, check it out. You know some of these products such as Betty Crocker, Annie's, and then you got Cheerios, Chess Mix, and all sorts of other unknown products. Now looking over Simply Safe Dividend, based on their dividend safety score, they're rated as 90, which is very safe. You got your dividend yield of 3.66. And then looking at the key metrics, you can see payout ratio is 51 which is low. And then you got your forward payout ratio of 52. And look at this, guys, a dividend streak of 125 years without a reduction. That's just impressive. You got your dividend growth the last 20 years of 7%, last 5 years of 2%, and then you got your latest. And then only a dividend growth streak of 3 years consecutive, but look at that. 125 years without a reduction. So that's pretty impressive in my opinion. You got your details, get paid quarterly in the months of February, May, August, and November. You got your annual payout, $2.36 per share. Ex-dividend date has passed. And then you got your upcoming recent payments. So February would have gotten you like 59 cents. It is maybe undervalued based on Simply Safe Dividend. Then you got your dividend yield over here, 3.6, which is above the 5-year average. And then your P forward ratios and stuff. It is in the low range next to the 52-week low of 61. You got at the time of this video is about 64. And then you got your P ratio over here of 14 versus consumer staples. Other more stats over here: free cash flow, earnings per share, sales growth, outstanding sales, total sales, return on investment capital of 15%, return on equity of 25, operating margins, net debt, and then you got your interest coverage. Now going over to tip ranks, they rated as a hold with a target of 67 with a 5% upside. And then you got your high of 76 and the average of 67, and then you got your low of 58. Now moving along to our next one, which is Church and Dwight. The ticker symbol is CHD. Again, another consumer company that you probably use daily. And you got all your brands right here, from fabric care to health and well-being to home care and personal care. So these are some of the products that this great company provides for us. Dividend safety score of 99 based on Simply Safe Dividend. You got your dividend yield of 1.10. Now looking over the key metrics, you can see payout ratio is 34. You got your forward payout ratio of 33. 122 years without a reduction, guys. Pretty impressive. Look at the dividend growth. The last 16 years, 16%. Last 5 years was also pretty good, which is 7%. And then you got your dividend growth streak of 26 years without of consecutive increases, followed by an uninterrupted dividend streak of 122 without a reduction. Looking over the payment details, you can see payment quarterly in the months of March, June, September, and December. You got your annual payout of $1.09 per share. Ex-dividend date is November 14. And then you would have gotten like these things you see. December, September, and June. Looks reasonably valued based on Simply Safe dividend. And then you got your dividend yield, which is below the 5-year average. Forward payout ratio above the 5-year average. It is high right now. No, it's going to get to the 52-week high. Consumer staples right there. And then you got your P ratio. Looking over some of the financials, you can see earnings per share, sales growth, total sales, return on investment capital, return on equity, free cash flow, operating management. You got interest coverage right there. Switching over to tip ranks, based on their analysis, they're rated as moderate buy. You got your target of 100 on 1% upside though. A high of 108, an average of 100, and then you got your low target of 76. And then the third one I want to talk about is one of my favorites, Procter and Gamble. Ticker symbol is PG. Another solid company. If you go see all the baby care, fabric care, and all these amazing products that, in my opinion, everybody uses. Let's go to Simply Safe dividend. Based on their dividend safety score, you're rated as 99, which is very safe. You got your dividend yield of 2.41, and then you got your payout ratio of 58, forward payout ratio of 56, 33 years without a reduction. And then you got 8% last 20 years, last 5 years of 6%, 67 years of consecutive increase, which is pretty impressive. But more importantly, look at that, 133 years without a reduction. Payment details: you get paid quarterly in the months of February, May, August, and November. Annual payout will be $3.76 per share. And then you got your ex-dividend date of January 18th. Looks reasonably valued. You got your dividend yield below the 5-year average. It is closer to the 52-week price high. Then you got your P ratio right here. Financials, you can see earnings per share, sales growth, total sales, return on investment capital, and then you get your return on equity, operating margin, net to debt capital, interest coverage. Going over to tip ranks, you can see moderate buy. You got 5 buy and 3 hold. Price target would go to 166 with a 6% upside. And then your highest price target is about 175, 166, and you got 157. Next on the list I'll talk about is Coca Cola. Colgate. Ticker symbol is CL. Another solid company which specializes in personal care and pet food companies. You can see some of the products that, again, it's in every household, in my opinion. Going over to tip ranks, based on their dividend safety score, they're rated as 90, which is very safe. You got your dividend yield of 2.32. Looking over the key metrics, payout ratio is 59, forward payout ratio is 55, 128 years without a reduction, guys. That's just another impressive company. Last 20 years, 9%. Last 5 years, 3%. And then you got yours dividend streak of increases of 60 years, uninterrupted dividend streaks of 128 without a reduction. Payment details: you get paid quarterly, February, May, August, and November. You got your annual payout of $1.92, and then you got your based on Simply Safe dividend. Look, another reasonably valued company. And then you got 52-week range. It is high. On the 52-week range, so you always want to try to see if you can buy it when there's a dip. So that's just I always try to do that. Annual earnings payout ratio, earnings per share, sales growth, return on investment capital. So you can see. Next one on the list is Coca Cola. The ticker symbol is KO. Again, one of my favorite companies to invest on. Producer of beverages. So you got all these brands that, again, it's in my opinion, in every household. Moving along to Simply Safe Dividend, based on their dividend safety score, they're rated as 80, which is safe. You got your dividend yield of 3.10. Looking over key metrics, 69 for payout ratio, for payout ratio 67, 103 years without a reduction. Again, another solid company. Last 20 years, you got 8%. Last 5 years of 4%. 60 years of consecutive increases, and 103 years without a reduction. You get your dividends based on quarterly, months of April, June, July, October and December. You got your annual payout of $1.84 per share. Again, looks reasonably valued. And then you got right here, pretty good middle. I would like to prefer that towards the end, right closer to the low. That way we can get it cheaper. Earnings per payout ratio, free cash flow per share, sales growth, total sales in billion, return on investment capital, operating margin, and then you got your interest coverage. Going over the tip ranks, based on their analysis, they rated a strong buy, 4 buy, 1 hold. Price target would go to 64, so with the high of 67 and then the low of 60. Alright guys, those are my 5 companies that have been rewarding Dividend Investor for 100 years. If you don't have these in your portfolio, you definitely want to do more research and see if these great companies have a place in your portfolio. Do your research, guys. Always do your research. Thank you so much for watching. Stay cool, keep investing, and I'll catch you guys in the next video. Right? Take care. Aloha.